The market's absolutely pumped today. We need to see how that positions us for tomorrow, and that means that we need to talk about tech as well. I am Dr. Stock, Doctor of Education, and a bowl of mashed potatoes walked up to an orange tuber and said, well, you're not a carrot, you must be a sweet potato. The sweet potato says, yes, I am. My wife was quick to point out that sweet potatoes and yams are not the same thing. Am I going to leave the joke in the video anyway? Yes, I am. All joking aside, the markets, we need to look at them. Big tech, need to look at that as well. As a matter of fact, Tesla, Nvidia, Apple, we're going to look at those. Actually, we'll fire things off with Apple because their earnings came out. And when I put that into perspective when we talk about the other companies as well. And if you guys want to see how I'm playing these markets, you can do so over at the Patreon. I'll tell you about that later, as well as my options course and the free stocks from Moomoo. In the meantime, let's get over to the charts on this thing. And we're going to start off with SPY, and we'll talk about the good things we see there. And then we're going to move on and we're going to talk about the Qs. And then we'll get to Apple, Tesla, Nvidia. I think each one of them have a lot of interest for us to be paying attention to. So let me pop this up here. And this is the chart for SPY. And what we can see here, what's incredible. So I mentioned in my earlier video that we closed yesterday above the 200-day, that could be further bullishness for us. And you can see how the market reacted. I also mentioned DXY for tracking the strength of the US dollar, saying that was dropping. I also talked about the bond yields that we had for the 10-year. That also dropped more since my morning video. The market loved it. The market ate it right up. Where does that put us? It puts us at the top of this bearish channel that we have. You can see what happened the last time we got there. You can see the sell that we happened. However, that was through spiking bond yields that we saw that happen. That was through uncertainty with the Fed also going on in there. And I think that we're in different conditions now. I think we have some room to the upside of this. Apple isn't helping us. I'll talk about that soon to see what exactly that can do. However, I think there's still a lot of strength that can be had, and I think this correction that we see here got to be a little bit overdone, and it's possible that we start popping out the top of this. I don't know if that happens tomorrow or if that happens next week, but it is most definitely something to watch. The momentum is looking pretty good right now. We'll see if that momentum holds out. If we can stay above the 50 on the RSI, even if we come down and tag it and then pop back up, that's further bullishness for us. If we cross back down through it and then stay below it for a sustained period, that we get faked out like we did back here, faked out like we did here, that story is yet to be told. We'll see if that top of that trend line holds. If it does hold, back down we go. However, the silver lining there, should we return back to the bottom? Let me take this away. The silver lining, should we bounce off of that top trend line and come down, even though that might be short-term bearishness, that should we come down, I think it's possible that we catch that support for SPY at 410. Now, we got to put geopolitics aside when we talk about that, because if we get escalations at the geopolitical level, if we get further news of war or any other big bad that we could think of course, that's going to be something that's going to be dragging on the markets. We got to watch that. And then on top of that, we also have to pay attention to what is still happening with bond yields and also with DXY. As a matter of fact, I should put those up as well because they're also getting to critical points, and I think that they fit within the purview of this video. So I'll put those up as well. So as for SPY, what are we watching for? We want to watch for this thing to come up and try and test out like 433 because that's where we had that 50-day coming down. We were able to close up above the 50-day EMA, which is a good thing. But breaking that 50-day, that's this little blue squiggle that you can see sticking up above the trend line. That can be good for us. Breaking up above it is going to be even better. So if we can close tomorrow up above that level, that'll be good for us. However, after such a strong day today, after this strong 4-day rally that we had, and getting into Friday, I could see a lot of people taking profits. It's possible that we get some of that softness. And if we do get some of that softness on Friday, that puts the pressure on next week for showing us, are we going to break through resistance to the top, or are we going to come down and retest support down here, which is actually at the 421 level, or we are going to come down and double bottom at 410. We're going to have to watch for that. A higher low is an excellent thing. That is a very good sign for us that we're about to turn things around. That can help be confirmation that the bottom is in. This would be the bottom down here if that does happen to take place. Should we double bottom on this thing and go back up, that is also a bullish sign. So doesn't necessarily mean that we've already seen bottom. It could be that we come down and we retest that bottom, but not putting in a new lower low is actually a very good thing. And as I zoom out on this white line that's coming up across the bottom of this is long-term historic support. If we haven't seen bottom already, I think that bottom comes in around 402, maybe a peekaboo down to 400, down to this bottom long-term trend before we really start ripping back up. And I think that should we not already have the bottom priced in for now, recession aside, I think for Q4, we'll say Q4's bottom. If it's not already in, then that bottom comes in right around that 400 or 402 level that I think would be the absolute lowest that we see, assuming that we don't change the environment that we're in right now. If we change the environment on the macroeconomic side, that the reports that we get, the economic reports, that inflation is going way up, that we see bond yields start to spike up incredibly high again, that the good dollar continues to get stronger, those are all things that can impact that statement and push us down lower should they spike even harder. But under the current conditions that we're in, I can't imagine that we'd break down much below that line. I just don't know that we have enough negativity given the sell-off that we've already seen and the fact that we haven't returned to those previous peaks that we've had, especially on an inflation-adjusted level. For right now, I think that we're in good shape, even if we do retrace for a little bit back down towards these trend lines that I have, back down towards these supports that I have drawn on here for you. So tomorrow, possible softness, especially with the way Apple reported. We're going to have to look at that. Let's take a quick look at QQQ just to see where that positioned us. And this one is also very interesting, even though it's not at the top of our trend line that we have. Where it is, it's got sandwiched in between the 50-day EMA, which is in red, and the $50 SMA, which is in blue, which can act as resistance for us. Closing above that is also bullish. If we come back down off of that, well, it's the end of the week. We've had a really good, strong run this week already. So Monday, green. Tuesday, green. Wednesday, really green. Thursday, really, really green. So that's a lot of up. There's oftentimes, after all that up, some people lock in profits, especially with options plays before the weekend. I have long positions, I have some hedge positions, and I'll tell you about my Apple position that I have as well. So let's move on from there. Real quick, stop by DXY. So this is going to tell us about the strength of the US dollar. Basically, stronger dollar, lower market is the way that you can think about it. And so this is the daily chart that we're looking at. And the importance here is the 250 period moving averages that we have on here, whether it's EMA, SMA, whatever. Breaking down below that is the next critical thing that can send us higher. So breaking down below that level, which is right around 105.50, we want to be watching for that. So should we break down through that level, down through this, and start showing some more bearish signs? Matter of fact, should the momentum cross down below 50, that can be a sign that could really help us out. So down below 50 on RSI, down below the 50-period moving averages could signal that there's more lower movement to come along through the strength of the US dollar. And pretty similarly to that is what we have for the US 10-year Treasury yield. That when we watch this, we want to see this come down as well. Not quite as close that we have to the 50-period moving averages. The RSI did drop down below 50. That is good for us. We've sold off significantly starting yesterday, right around the time the Fed came out with their numbers and Jerome Powell spoke. Continued some of that drop today. And now that we switched over, as per the clock, right now this is showing the very first start of what we see for Friday. So it is possible that we start to see that come down and retest these levels that we have. That could downward movement for the 10-year yield and also for DXY is going to be good for the market. So we're going to keep an eye on that. Should they start to push back up, the markets can likely push back down, especially if they go back and retest these previous peaks. However, just take a look at the movement that we've been on. A pretty steady upward climb going all the way back to May, but the markets didn't really strongly react to that until we came out to about the middle of July, a little bit late in the July period that we came down, tested this, and then took off. And so now we're just waiting for to see where that next period of softness comes in for that. All right, let's go over to Apple. A little bit of commentary on Apple. So in the post market, they're rocking down at 171.47. So importantly, and I know I got a lot of drawings, let's just trash them so that way we have more of a clean slate on here. And we'll also take down the EMAs on this so we can see a little bit more clarity for what we have. So what was good for the close today? Good for the close today, closed up above the 50-day. So that's staving off that death cross movement that we could possibly be seeing. Right now in the post market, given the earnings, we are just barely above the 200-day, but staying above the 200-day or bouncing off it, that can act as really good support for us. That's also bullish to stay above it. Even more bullish if we can close up above the 50-day as well. So we want to watch that. Now, one of the things that I did get rid of is this trend line that we have across these tops here. And this is one that we came up to the top of. And you want to really be watching for that as well, because breaking up above that is going to be a good thing. In the meantime, it could be something that holds us down a little bit on Apple. However, we'll see if the rest of the market there's enough positive news to really help catalyze Apple and push us up from there. Now, some of the things that they talked about, one of the big things in the drop, and let's go down to the hourly. As a matter of fact, we'll even break that down for. Let's go down to the minute chart on this one. Because this minute that you see right here, and this was at 5:23, so 23 minutes into their earnings call, this is the moment where they started saying, well, there's only 13 weeks of revenue for Q4 for 2023, whereas last year we had 14 weeks of revenue, and that extra week makes a big difference. The market did not like that. As soon as they said that, drop, and we got a pretty significant drop from there, about a $4 drop in the price of Apple. And so then kind of trading sideways from there throughout the rest of the earnings call, throughout the rest of the Q&A period that took place. And we had a few spots where it kind of jumped up. This is a little bit low volume for us, although it is fairly significant volume when we look at least in an after hours, which would be pretty typical for an earnings call for Apple to see these sort of spikes that come in here. So at the very first, kind of popped up on the earnings, and then very quickly from there started to drop down. But you can see the way they change as soon as I bring in, there's a volume over here of over 7 million. And then when we look at these volumes are about 500,000 there, about 500,000 there. And then we come over to where they talked about the fact that there's only 13 weeks of revenue, so they're not exactly sure. There might be a little bit of comparison against last year that's not going to be too great. That sound of doubtfulness from Apple for their forward guidance is the thing that really moved that down. And I can tell you, this is one that I took on the chin. I thought that their guidance was going to be a little bit stronger. I thought the market bias was something that was going to be there to really help prop things up as well. And so we're going to have to see how that turns out tomorrow when the market opens. And the call option that I took was at 175 with an expiration of tomorrow. And what I said over in the Discord, I said that is a risky move, because should the earnings not go as I expect, that's something that can really dive really quickly from a value standpoint. And so we'll get the volatility crush, plus we'll get the fact that now that option is out of the money, even though I played it a little bit under that 177 just in case we saw a little bit of softness. So we'll have to see when the market opens how that goes. We have a significant reason for bullishness over longer time periods, over the next several days or even the next several weeks. And I want to put that out there and be clear that bullishness, I think, should be expected at least up until we get the next inflation report coming out in the middle of November. And I don't know that Apple necessarily changes the market's direction between now and then. I think with bond yields dropping, I think with the strength of the dollar going down, if that path continues for us, if they continue to soften, that the market is going to continue to recover over that time. We're going to have to watch and see if that takes place. Black swans, geopolitical tensions aside, because we don't know, should that escalation happen, should we know de-escalation, whatever it might happen to be. But as far as economic reporting goes, I think between now and inflation time, when we get CPI, PPI reports coming out, that's what to look forward to. So let's take a look to see for Tesla now. This is the daily chart that we're looking at, and you can see if I zoom in on this part right here, not right there, if I zoom in on the part right here of this chart, the thing to pay attention to is this 200-day that we have that we came up and got rejected at. That's resistance for us, and should we fail to break through that resistance, that can be a bearish sign for us for Tesla in the near term. So we want to keep our eyes on that. It's a game of rates for Tesla, that as the interest rates come down for Tesla, that can really help be a demand driver, because Elon came out during his earnings calls and talked about how high interest rates have a direct impact on the auto industry. So they're very interest rate sensitive. So that is most definitely something that we want to watch for. And watching that 10-year yield come down is going to be a very bullish thing for Tesla. So the more that drops, the better it is. And we want to keep on keeping our fingers crossed if we're bullish on Tesla for that to happen. Should we break the 200-day? We have room up to about $230 per share, I think, in the near term for Tesla. Should we break up above that? So that would be about 4 to 5% up from wherever it closed today, right around that 218 level. In the after hours, it's rocking about 215 at the moment. So recovering slightly from where it sold off after Apple dropped the bomb for the guidance for that. So that's something to look for. Now, should we get rejected at that 200-day and sell off, we can see back down to 210, and then below that we have 205 for a little bit of support, and then major support coming in at 200. And then we also have down here at the bottom of this, right around 192 for the trend line is where we're going to watch for this bearish channel to hold for us. So in the near term for Tesla, I think that there's opportunities for dollar cost averaging. I've done some of it myself. I've added it on. I posted that over at the Patreon. You can go over there. You can check it out. That link is down in the description for that one. The momentum is climbing. It's not back up above 50 yet on the RSI on the daily chart. So you want to be watching for that one to keep on climbing, cross 50, because that can be a very bullish sign for Tesla stock. Let's move over to Nvidia. So for Nvidia, not as interest rate sensitive as Tesla is. However, it does have that China headwind because of the sanctions on some of their AI products that they have, and they got further sanctioned, and that really led to some of this other drop that went along with the markets as well. So we want to watch for that. We didn't meet the 50-day yet, which is all the way up right around, let me see, almost $444 is that magic number. So you can see where we landed right now. It is possible. I mean, the RSI is good. We're just crossing 50 right now on the RSI. The momentum looks good. Their earnings are on November the 21st. It is possible that we peak out, that we retest some support level and then run up to earnings. We're going to have to watch and see if that's what takes place. As we come nearer and approach that, I think that'll be further guidance on how we should handle the earnings as they come up. So if we have a drop leading into earnings, I think we could go bullish on it, especially if we get down close to that 400 level, if we get worried at all leading up to those earnings. If the market doesn't change its direction between now and then, assuming the inflation reports are good around the middle of November, I could see us coming very strongly off of this one, coming off CPI and PPI. So the markets have good momentum. I think right now the sentiment on the market itself is pretty darn good. We're going to have to see if the SPY and the Qs can break that resistance. We're going to have to see if tech can keep on pushing. It'd be nicer if the Apple headwind wasn't there right now. However, for Apple, we're going to have to see if the rest of the stocks are enough to support it and kind of prop things up in the meantime, in the near term. So we're going to have to watch for those things. So real quick, I want to tell you about this, my buys and sells, how I'm playing this market. They are available over at the Patreon. That link is down in the description. I also have my Nvidia stock price prediction and earning projection over there. I'm going to update that for their earnings coming up, and I'll be re-releasing a video for the Patreons and also the updated spreadsheet ready to go. Likely this coming week is when I'll be handling that. That way we have time between now and earnings to set our game plan and really capitalize on that. I do a lot with options. I have an options course that's over there. I use options to build up the cash pile in my portfolio and then use that for dollar cost averaging on my favorite stocks. You can learn how to do that too through that course that's available over there, and it's still under construction. A lot of worthwhile information, more being added to it all the time. And then also the free stocks from Moomoo. That link is also down in the description as well. You can sign up using my link. Down here are the deposit levels and the free stocks that go along with those related deposit levels. So go ahead and check those out. All right, guys, let me wrap this thing up. So as far as the markets go, the momentum is looking great. Watch for the bond yields to keep dropping. That'd be a great thing for us. And then we also want to watch for the strength of the dollar to keep going down. Also great for us. Should they rebound back up? Not so great for us to have a bullish direction going on in the markets. So that's absolutely something that you should pay attention to, along with the economic reports that come out. We don't have a lot of major ones that I see between now and inflation reports in the middle of November, which can be good for markets, that things can kind of like settle down and kind of be easy for a little while. And that can really help us out. Apple would be nice if their guidance was a little bit stronger for us. We'll see how the market deals with it tomorrow when it opens. We know in the after hours that it didn't really care for it so much, but as long as it stays above its 200-day, I think that's still a bullish thing for us to see that happen. We cross down below the 200-day, we can put in fear of a death cross for Apple. Absolutely something that we also want to keep our eyes on. Tesla's got to break the 200-day in order to get back its bullish status. It has to break that to get up to that 230 level. So be watching for Tesla and its 200-day. And then finally, Nvidia, watch what it does leading up to their earnings. If it sells off and the market sort of settles and comes off its recent peaks after that, then Nvidia is likely going to come down with it. But that also means that we could likely see a ramp up in its price leading up to those earnings. And so I think there's lots of incredible opportunities to be played at any point in time through that. Thank you guys for watching this video. Join us over at the Patreon, see my buys and sells, be part of my community. We'd absolutely love to have you over there. And then also, don't forget about your free stocks from Moomoo. That link is down in the description. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.